Welcome everyone, Simon here from the Whales of Wall Street. We have an exciting and insightful video for you today introducing André Casterman to the show. Absolutely delighted to have him on. We're going to be discussing the trade finance market, which is obviously a market value of trillions upon trillions of dollars, and how we can interact tokenization and digitalization into this sector in particular. Of course, something that we talk about quite a lot on this show. And more importantly as well, in addition to this for you guys, is the interaction between the likes of Zinfin's XDC, the Tradeteq aspects as well, and the integrations that TFDi are doing through André as well, all incorporating together to make this a really exciting evolution in the trade finance markets, including the likes of treasury bonds and real world assets coming into play as well. How this all interlinks, we'll find out in a moment's time. I hope you enjoy the video. We'll see you on the other side. Okay, guys, so this is going to be a really exciting discussion. I'm delighted to welcome André to the channel Whales of Wall Street. André, welcome. It'd be great if you could give us a bit of an intro to yourself and a bit of background, especially with your interactions with the XDC Zinfin network, and of course, your fantastic work that you do with TFDi as well.
Hello, Simon. Great to be on your show. It's my first experience, so really excited about the opportunity here. So on my side, yes, I've been for 30 years now in the fintech space. In the 80s, I was excited by programming. Then I joined Swift to discover more the financial world as I studied economics. And I stayed at Swift for 24 years. Then I thought there's more to fintech than messaging, because Swift is all about financial messaging. So I became basically an investor and a consultant to fintech companies, mainly focusing on trade finance. But you know, we have to align with the industry. And I moved gradually, extended my activities to digital assets. And this is how I got started with great companies like Tradeteq and others, and with the XDC network.
That's awesome. Ironically, on those points, especially with the evolution and everything that's going on in the space, it's quite crazy at the moment. So many amazing things coming together right now. At what point in your mind, or certainly from a timescale perspective, did you realize, or the industry realized as well, that tokenization and digitalization was going to be such a huge part of the trade finance sector? And of course, a good thing, secondly, that there was a capability, a technology available and an evolution to the industry as well.
Yeah, it took me some years to accept this new technology, because when I moved from out of Swift and set up my own advisory and started to engage with a series of fintechs, I still had this background of Swift where, you know, everything is centralized, technology is centralized, governance is centralized, and blockchain suggested everything should be decentralized. And I have a technical background, so I thought, why do you need a new technology to exchange information? I mean, if you have to exchange payment information, you use Swift. If you exchange other types of information, you have secure internet connections, APIs. So what the fuss about all of this blockchain? That was late 2015, 2016. So it took me time to accept the excitement and to join the excitement. In the meantime, the banks had created a blockchain consortia in trade. And I thought, I'm not excited, still not excited, because it's all about using blockchains to exchange information. And exchanging information is a de facto use case on private platforms, again, like Swift or other platforms, or on the internet with API. So I was still not convinced. But then the whole point around trade digitization and the digitization of electronic records that are transferable. So this whole work done by the UNCFAC, the United Nations, to get policymakers to change national laws to enable the digitization of bills of exchange, prom notes, bills of lading, warehouse receipts, and a few other negotiable instruments, got me thinking that indeed there was a need for additional technology where blockchain could be actually finding its niche, at least in trade. And of course, in the meantime, I became an investor in digital assets, and I saw and I experienced the power of blockchain
Hmm.
when you're transferring digital assets, which represent money at the end of the day, from one mobile to another mobile device, because it could take, at least on the XDC network, it's so quick
Yeah.
that we definitely feel like entering the 21st century.
Yeah, it's really fascinating, and it's quite ironic. You talked just a minute ago about laws and legislations. There's a huge ripple effect going around the world right now, and it's not something that's obviously like new. It's been talked about for many years, as you just mentioned. But I just want to focus very quickly and briefly on the recent law passing here in the UK. So the King's approval, if you like, I believe it goes live around about the middle or towards the end of September. So this is around the UK digitalization of trade finance. This is law passing, so it's coming whether we like it or not, or the reasons behind it. What does this mean to the trade market region? I'm not just talking about the UK, but of course the global aspect of this is absolutely huge. What does these laws and regulations passing into law, etc., through Parliament, what does that mean to the trade global market, and also the importance of things like blockchain? Where and how does XDC / Tradeteq apply to these areas and the future development? Because obviously there's a short-term goal and a long-term goal here as well.
Yeah. So first of all, on the legal side, the English common law
Mhm.
is supporting the majority of global trade contracts. This is why this legal innovation taking place in the UK and being fully completed through the UK Parliament, that was done in July of this year,
Mhm.
is not just a UK domestic thing. It's a global piece of development of news for the whole trade market, because English law is really the major legal system. There are other important legal systems like
Sure.
New York law, French law, German law, but they have more been rolled out in particular corridors and are not the number one legal system. So it's a UK development with a global impact for all banks around the world, because in some of their transactions, they would be using the English law. Second is,
Mhm.
you could think, why do we need to change the law?
Mm.
Because all the specialists in our niche market are getting excited. But if you step back, saying, why is this needed? It is needed because actually, when you digitize a document, well, we can all digitize documents. We can all create PDFs, and if you digitize an important document like an invoice, you don't need basically much more technology than a PDF writer, which we all have on our laptops,
Sure.
and you can send your invoice using that kind of format. When you're digitizing a payment obligation, a commitment to pay, like a bill of exchange, a promissory note, or a recognition of possession of goods on a ship, like a bill of lading, this is representing value. It's
Mm.
representing value because the holder is the one who will benefit from this value, and who will get access to the goods in the case of the warehouse receipt or the bill of lading, or access to the money being paid on the due date, like in the case of promissory notes and bills of exchange. So we represent value, and that title document is very different because of that representation of value versus just an information document like an invoice.
Mhm.
The title document can be transferred. You can say, I'm selling this right to those goods. I'm selling this right to receive the money through the bill of exchange. And there is a whole market to a trading market around those documents. Now, as you can see, those documents need to be highly protected,
Mhm.
and they need be recognized into law, because traditionally in the 19th centuries those laws were defined around those instruments, and the laws defined in the 19th centuries referred to paper documents, because there was nothing else to write information on than paper.
Mhm.
And it's all the point of, in the English law, around tangibility. You need a tangible media to write this payment commitment, like paper in the 19th century. Now, we are now in the 21st century, And with new technologies that have been invented around the same time frame as this model law was created by the UN, in parallel, you had the techies on the encryption side who created blockchain, who created Bitcoin, who created digital asset infrastructures. An XDC network was created in parallel as well to basically track the possession of value in an intangible way. And this technology has to be recognized as into law so that you can achieve the possession of value in an intangible way. And that's the whole point of the ETD Act, the Electronic Trade Document Act, is to recognize the move from a tangible support, paper, to an intangible support, an electronic record. It could be blockchain, it could be another way to do it. We'll see how the technology world will evolve, but that's the only change we are actually introducing, because we are in the 21st century and you don't need paper to basically recognize possession of goods on a ship or possession of a claim in like a bill of exchange or a promissory note.
That's amazing. I suppose I mean, some of my background is in distribution and the supply chain management aspects, and I totally understand the mechanisms you're speaking about here, and a lot of the complexities over the many decades and how this can change so much. One thing that's really interesting is when I was looking at the numbers in terms of the kind of like value, if you like, of trade finance in general, and even just the supply chain management aspect was absolutely staggering numbers, trillions of dollars. One topic that's come up on our channel quite recently, and I try to cover the best I can, is about the trade gap. And the TFDi, so those that don't know, is obviously the Trade Finance Distribution Initiative that you're very heavily involved with. How are they tackling the closing of that trade gap? And for the benefit of the audience, first of all, what is the trade gap? Why is it important to focus on that area and improve that area? And especially with the digitalization, some of the factors that you just mentioned, obviously just a moment ago. And I'd really like that take on that, because also you've got an event coming up in October, which I'm sure a lot of this will be discussed in anyway. But I'd be really interested to hear your thoughts on that trade gap aspect of it and why it's so important to really focus in this area.
Yes, so basically, and I will link this topic to the ETD Act as well. Sure. In a few minutes, but to get started on the trade finance gap, actually, with the anti-money laundering regulations that have been introduced over the last 15 years following the global financial crisis of 2008, the cost of managing relationship with corporates has increased tremendously for banks, not only corporate relationships, but also SMEs or FI relationships in the bank-to-bank correspondent banking space. So any relationship is a cost now, much higher cost than before, because you have to continuously validate the AML requirements as per regulators. So basically the banks have decreased the number of relationships in the bank-to-bank space, correspondent banking, but also in the corporate space, claiming that the cost of doing business with some parties, with some clients, was just too high. So they have de-risked their operations, increased their focus on core clients, and that has created a huge gap on the long tail of corporates, which are those SMEs, that have a big need for indeed working capital to run their operations. They need to buy raw material to run their operations before being able to ship and get their money later. Okay. So the working capital requirements from those SMEs is huge and has not been fulfilled by the traditional banks because of that higher cost of maintaining those relationships with those SMEs for the banks. So what we see now in the market is new non-bank financial institutions or platforms getting into the market, a bit like factoring companies came into the market decades ago to address this gap. And basically those platforms are extending the use of a very traditional techniques called supply chain finance to secure the funding of SMEs at transaction level by getting the invoices issued by those SMEs approved by their own clients, the buyers, which are usually larger than the suppliers themselves. So those platforms are democratizing access to working capital at transaction level. And basically, those platforms are tech companies extending liquidity. They don't sell technology. They're really extending liquidity, but they are not banks. So that means they need liquidity from someone else. And in the distribution space with Tradeteq, what we are enabling them to achieve is basically to get that liquidity from funders. Funders could be banks or asset managers, institutional investors. Some are pension funds, actually, and who recognize that those transactions are legitimate transactions, properly managed from a anti-money laundering perspective, of course, and providing quite an attractive yield for those funders. And that's the whole point of Tradeteq, is to basically get funders to fund the SME funders. So it's really funders funding the funders by extending liquidity to those platforms that are onboarding those SMEs. And we call them non-bank financial institutions, or we could call them alternative lenders. And we see them popping up around the world at domestic level, at cross-border level. And they are important players in the TFDi initiative, because in the TFDi initiative, we basically want to scale this market called the trade distribution market, which is actually the secondary market of trade, where indeed those who have the liquidity but do not want to basically serve the SMEs themselves, they are funding the funders and basically supporting those alternative lenders. The same practice is being used by banks, of course, and will be increasingly used by banks as Basel III regulations are coming into impact the balance sheet management of banks on the trade side. So we definitely promote trade finance as an asset class, whether originated by banks, originated by platforms, or B2B platforms that require funding as well. We promote this asset class that represents the real economy to the capital markets players, the asset managers, and institutional investors that have the liquidity and are looking for yield. So the trade finance has been traditionally an attractive asset class. It has been demonstrated since 15 years by the banking industry, but it was hard to access for capital markets players. With Tradeteq, we make this as efficiently operated as possible, as easy to access as possible, as transparent as possible as well, so that trade finance is not in the future considered as an alternative asset class, but a primary, a traditional asset class. So that's the whole point. Now, with XDC Network, what we have done with as part of TFDi initiative with XDC Network is basically to add a more advanced, I would say, 21st century option to basically enable funders not only to use notes through repackaging operated by Tradeteq, but we enable funders to invest in tokens, also operated by Tradeteq. So I would really position tokenization as an option that is conceptually the same as securitization, but the way the technology operates is completely different. Less manual processes, higher speed, and lower cost of entry to new funders to access trade assets, thanks to the partnership between Tradeteq and XDC Network as part of TFDi initiative. So we're really proud of not only making more liquidity accessible to SMEs via their preferred originators, lenders, and we are really proud to demonstrate how blockchain is basically serving the most advanced use case in terms of making the real economy asset accessible over tokens to institutional and retail investors. And that's the whole point of the partnership between XDC Network and Tradeteq as part of the TFDi initiative.
That's amazing. I love that enthusiasm and the passion behind it all. the extensive dedication. It's incredible. There's a couple of keywords you mentioned in there about the asset side of things and the yield aspects. The Texas event that I believe you're in attendance with quite recently, one of the interesting topics that stood out for me was around the US Treasury token offering. This is obviously a big part to play in this. Could you just spend a bit of time just explaining what that is? And something that we discuss on the channel quite a lot is around real world assets, and particularly now bonds coming into that conversation as well. What makes tokenization so important to that element? Like, why do we need that? What does it solve? And also, how does Zimfin play in this as well? Because obviously there's a lot of competitors out there. I've mentioned a few on previous videos, like Stellar, of course, Ethereum in general, and there's a multitude of others. How does Zimfin sort of place itself amongst all of those when it comes to talking about particularly that information coming out from the US Treasury token offering and the bonds and the real world asset utilization as well?
Yeah, so basically, first of all, on XDC network, the focus has been from the start on, thanks to the co-founders, retention tool on real economy assets like lending, or you can call it trade finance, but it's all about exchanging liquidity, getting the liquidity to the SME or the corporate that needs it, or in some cases the lender, indeed, via the lender. Now, tokenization is all about, there are multiple use cases which I've documented through a full-scale blueprint, I would say. And it's all about making the access to something more cost-effective. Because as an investor, you're not necessarily an institutional investor investing billions who can absorb hundreds of thousands of entry cost into an asset class. So with tokenization, the industry will democratize access to many more asset classes, including, very illiquid asset classes like art. As an investor, can you invest in a top value, high value piece of art? Usually what you need to is to buy the whole thing and to secure it. Or luxury cars, you have also to buy the whole car and to secure it. But what about having basically fractional ownership? And that has been done through traditional methods in the 20th century, fractional ownership, but the cost is still quite high. With tokenization, we basically are able to sell pieces of a high value item, a piece of art, real estate, or and that is the big difference that tokenization will bring. Now, with the USDY token launched by Tradeteq on the XDC network, we basically have a traditional asset, US Treasury bonds, and basically with tokenization, we're not trying to offer fractional ownership in this case, but basically democratizing the access to these traditional instruments. So it's all about lowering further the cost to access a traditional asset. So that's a quite traditional use case. It's very low risk because indeed the US Treasury indeed investment is low risk. There's a high liquidity in this market, as you would expect. It's not like betting on yet another coin that can drop 90% in the next few days. So the risk of the asset is very low, but the barrier to entry is now reduced even further. So you can really have investors starting at $100, for instance, in an asset class where traditional investors would probably start at $1,000 or $10,000. So the cost to access is the basic use case of tokenization, which Tradeteq has indeed demonstrated with this new innovation. So of course, we have done the same with trade finance assets, which are much harder to access. And that's the whole point of TFDi initiative, is to apply the same technology on real economy assets, real world assets like trade finance receivables, trade receivables, managed by lenders, banks, factoring companies, and supply chain finance platforms. In that case, the risk is a bit higher, but the yield will also be higher. But the goal is still the same. With tokenization and XDC network, you can have investors starting very low, like $100, and this is expanding basically the pool of available investors. We're really aiming as bringing those illiquid asset classes as well as liquid asset classes like US Treasury bills to the masses. And that's where XDC network is basically strongly focusing on. That doesn't mean the others can't do the same. Of course,
Sure.
they can do the same, and some are doing similar things. But then it's all about partnerships of XDC networks with the right players, layer 2, layer 3, whatever you call it, partners or that are embedding the layer 1 blockchain of XDC network to make the tokenization achievable. Because those partners like Tradeteq, they would not want to be operating their own blockchain, basically.
Sure.
That's not the point. The point is adding value on top of, in a particular use case, using a layer 1 blockchain. And in this case, XDC network is highly committed to the real economy assets like trade finance, and that's where the partnership started.
That's awesome. I think it's very apparent, Andre, that you are a world traveler. Obviously, Paris was the recent event as of the last week or so. In addition to what you've just mentioned, what were like the major topics and achievements that came out of that event? And especially when you're looking at the MLETR aspects of things and the trade progress in general, it'd be really good to know if there's anything that stood out for you and what you see like that vision coming forward. And I want to tie that up with the last final question as well, in the sense that this whole development we're talking about, your unbelievable background in the likes of Swift, for example, is huge. There's no question that CBDC stablecoins are, the frameworks are continuing to be built, the regulation, the laws, etc. What did you see coming out of Paris with the accumulation of everything that's going on that's really excited you? Because we're in a really big stage right now, and I've always said on the videos, 2025 to 2030 is going to be absolutely massive, especially with the UN's initiatives to 2030 targets, ESG, sustainability, development of trade. What stands out for you the most, and what you're most looking forward to in these next years to come?
Yeah, what's really exciting is the alignment of the policy world, government officials, that can trigger changes of law, basically, through Parliament. And we have done this. We've completed this in the UK and in France, very advanced, because the legal proposal is ready since late April, validated by the government since late June. And now the next step is really going through Parliament. And there is a full alignment between the Ministry of Finance, Justice, and the commercial world where I'm operating, tech companies, banks, and other stakeholders like institutional investors. So there's full alignment in the market. But what is our goal? Our goal is to bring more liquidity to those who need it. So increasing the liquidity in the market. If you are an SME, you want to export more, the government want to help you, but the government will not fund you. You need banks, you need institutional investors. And if you don't get the money from the bank, that is your main cash management partner for payments and liquidity management, you want to get funding from another party. So you might go to keep your traditional bank for payments, but if that one is not extending enough liquidity because of the risk, because of the cost of funding you might want to an alternative lender that is backed by institutional investors and that are ready to take more risk on you. And of course, they will charge for this. There's no issue about that. Of course, there is a price to any risk. But this is the world with TFD initiative we want to get to, is to offer more options to SMEs to get more sources of liquidity through those alternative lenders, new entrants in the market, very agile, very eager to take risks, but they will share those risks with credit insurers, with export credit agencies. We had BPI yesterday at the event in Paris, indeed, which is the French export credit agency. And we have the private sector, capital markets, who are very keen on SME financing because of the yield they can get at transaction level. Now, we need technology to get transactions to be exchanged between alternative lenders, banks, and their partners in the distribution space. And this is where Tradeteq operates. Repackaging over notes, repackaging invoices, portfolio, using notes for those investors who want notes, and tokenizing through XDC network to get liquidity from those who want to invest through tokens. But the key word, in my view, in this whole development on the DNI initiative with the Electronic Trade Document Act and the French developments, which are those MLETR policy developments, and TFDi initiative, the key word for me is liquidity. We want to bring more liquidity to those who need it. We want to democratize access to liquidity, lower cost of funding, more options in the market, and everyone will benefit from increased exports. Governments will love it because they're tracking exports and they need to justify why exports are decreasing. And one day, hopefully, they will be able to say, we have supported the market to increase liquidity through technology, to changes of law. And here are the figures: our SMEs are exporting more. But basically on the tech side, with the DNI initiative and the Enigio technology for MLETR, and with Tradeteq on the distribution side, the whole point is to introduce the originate and distribute model to increase liquidity in the market and to make trade finance really a primary, highly attractive asset class to capital markets.
That was awesome. That was a great wrap up. That's absolutely incredible. I think there's so much excitement at the moment and so much development to come. And obviously, I think it's really important that the audience listening and watching here just keep a close eye on all these kind of events that are coming up in the coming months, because this is where the real information comes out and we can see like all the development, whether you're a retail investor or you're in the space or you're working in these industries. It's just something that I feel everyone needs to be as educated as possible, if not already, and just see this development occurring. It's absolutely fantastic. One of the final points, Andre, because you've got an event coming up in October, and I know this is not specifically always a public oriented event, but there's always people very, very interested in what you're doing, and particularly with Zimfin Tradeteq implications as well. What is this October event about in the last minute or so of this discussion? If you could kindly let people know what that's about and what people could expect.
Yeah, all the concepts I'm talking about are already implemented by early adopters. Some are more advanced than others, of course, but we're going to bring them on stage at the Investor Day. The Trade Finance Investor Day is our first edition of this event. We want to make it a yearly event where I'm bringing the early adopters of the Electronic Trade Document Act and those technologies on stage, and of the Tradeteq technology and XDC technology on stage as well. So we're going to talk about how to achieve this originate and distribute model, this vision, how it benefits new entrants, how it benefits existing incumbent banks, how it helps them get liquidity themselves from capital markets. So all of those concepts will be demonstrated on stage by early adopters. And we also going to hear about how the private-public sector partnership has already worked very well in specific countries like India, because in India, the government has developed and rolled out a scheme in 2014 to increase liquidity at the level of the SME, and that has seen the emergence of different platforms. We're going to talk about this, because on the French side, they want to basically bring this whole policy development at the level of the European Union and have an open trade directive to force the market basically to contribute to this increased liquidity for SMEs. So we're going to talk about all of those policy and tech development through early adopters, proof points. And as you know, when I organize events, it's always about new new speakers, new topics, the most advanced and recent implementations, and that's what our audience will get in Watford, next to Heathrow Airport, on the 19th and 20th of October. So next month, basically.
That's gonna be amazing. That's not far from me, so that's all good. Andre, it's been an absolute pleasure to have you on the channel. The discussion topics absolutely fantastic. The insights incredible. Really appreciate your time. I know you're a very busy man, so massively appreciate it. Hopefully we'll get you back on the channel very soon, but thanks so much.
Welcome, Simon. Great to be here. Thanks again for the invite.
Thanks, Andre. We'll see you soon. Well, I hope you found that as exciting as I did. Absolutely fantastic insight from Andre. Incredible to have him on the show. Hopefully we'll have him on again very soon. Some unbelievable topics to discuss there. Loads of events coming up as well. And I think that's a really important factor, is to keep an eye on this. Albeit that some of us can't get to these events physically, it's still very important to keep an eye on anything that comes out of these, because it's just showing the evolution of the trade finance market in particular, and the orientations around blockchain and its infrastructures that are working behind the scenes to continuously develop and integrate as much as possible. And of course, whether you're a retail investor or just general interest in the space, it really starts ticking the boxes in our minds as to what's to come. And it's a really exciting time, in my opinion, for the blockchain space, particularly as well, of course, with the interactions of IoT and AI coming into fruition within these ecosystems to play out. It really truly is. The next 5-10 years, in my opinion, are going to be the most exciting parts of the history of blockchain. We're going from this speculative area to real utility, real development, real drive, and ultimately utilization, isn't it? That's what we want, and that's what's going to drive the markets. It's what's going to drive the technology and see the solutions come into fruition as time goes by. So guys, as I said, I hope you enjoyed this one. I'm really looking forward to the next one, and particularly the next topic video as well. But thank you so much for watching. Thank you so much for the support for the channel. If you could kindly subscribe if you haven't done so already, and smash that like button. Thank you, and we'll see you in the next topical video. Bye-bye.